Snipers HQ, where we calibrate the soul. Snipers HQ, where we calibrate the soul. Master the emotion, then we tally back the goal. Confluence rising, look at how the level stack. Sniper discipline, never looking back. Snipers HQ, stay focused.
What's good, snipers? It's your boy Ab, and we're gonna get straight into it. How you feeling? I hope you're having an amazing day, because I definitely am. Well, I did. It's nighttime now over here, but let's get straight into the video. We got a lot to talk about. So, economic calendar. We got wholesale inventories tomorrow, consumer credit, and then the trade balance, 3-year Treasury auction Tuesday, and then on Wednesday we got CPI, and we got Core CPI. We got crude oil inventories and 10-year Treasury auction in one day. Thursday we got PPI, Core PPI, initial jobless claims, and the 30-year Treasury auction. On Friday, we got Michigan consumer sentiment and Michigan inflation expectations. So for Monday, the focus is market positioning ahead of CPI, watch Treasury yields, energy, and dealer positioning. Then on Tuesday, we got the bond demand remains critical. Weak auction demand could pressure equities and push yields higher. And on Wednesday, this is the biggest event of the week. A hot CPI print could trigger higher yields, pressure growth stocks, and reinforce the higher for longer narrative. A cool CPI print could ignite a broad risk-on rally. Then for Thursday, we have the product price index, PPI, and core PPI, initial jobless claims. And a 30-year Treasury auction. I did read that already. So the sniper focus is inflation, labor data hit simultaneously. Expected elevation, volatility across SPY, QQQ, IWM, bonds, and volatility products. And on Friday, markets will gauge consumer confidence and inflation expectations following CPI and PPI. A strong inflation expectation reading ignite broad selling pressure. So we have a very volatile week. Very, 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 very important week. And then we know on Friday, June 12th, SpaceX IPO. They will launch SpaceX. So we have a lot. We have a lot that we gotta worry about this week. So this is the Discord. If you don't know, we opened up August 1st. Super dope Discord. I show it all the time. We got a lot that we're cooking in here, a lot of stuff. There's our mind, body, and spirit section. It's like my favorite now. So while we're on this, we have an announcement. So we're launching YouTube memberships. So this is for the loyal ones that want to get in the Discord. They're not in there yet. So the Discord, I said, won't open until August 1st. This is for you. We got the $6.99 a month. You just want to show your support and love. You'll have access to member badges, exclusive emojis, and a member-only chat. But if you want the Alpha Pass, you'll have access to Monday and Fridays lives. The pack will have the Fridays as well and the public as well. But with the Alpha Pass, you'll be able to engage on Fridays. And Mondays, same thing. And then we got the Q&A session and stuff. And then other updates that we'll throw out. So one thing that will be included if you get the Alpha Pass is this right here. So this is the weekly pass. And this is your options dealer blueprint, I should say. And Basically, it's going to give you a breakdown of how market makers move the market. So this is the weekly pass digital blueprint. And if you want to know how the market moves, how it hedges, and why Friday happened, how the flush accelerate, make sure you get that $13.99 thing and pull up this slide and I'll tell you, break it down to you. So I was looking for the market to experience a relief rally basically in this area. And if it does that, which I hope, we can't hope in the market, but I'll be waiting. I'll be expecting it though. I have something that I'm going to announce in a little bit. So make sure you like and subscribe. And it's big too. If you've been following me, it's real big. So we opened up with U.S. oil prices surging up 4%. We see the sell off a little bit. The market opened up slightly lower. And then we got breaking news. Trump says that Netanyahu, the Israeli prime minister, will have no choice but to accept a U.S. deal with Iran because Trump calls the shots. He said, I call the shots. I call the shots. Netanyahu, he said he doesn't call the shots, Trump said. Trump said today missile strikes by Iran will not impact the deal. He said he believes the deal is going on and said that Iran strikes had no change in his desire to conclude U.S.-Iran negotiations. Oil prices are trading higher after that as well. So right after he says they have no choice, we got a little bounce, the relief rally that I'm anticipating on. Let's see if it continues overnight. I look for it to happen during London sessions when the trend really starts, and then, like I said a couple of videos ago, that trend normally goes into New York session. So then we got South Korea stock market has been halted after falling 8.4% at the open. Ooh, could you imagine a drop like that? And it puts. So the Israeli Air Force says it conducted strikes in the western and central Iran. They are not playing at all. So that's not good, seeing the U.S. and the states go at it like that. Not good. So I do have something that I do want to talk about. I've been talking about the 1987 style crash, and I'm not sure if you know about what I'm referring to, but if you don't, there's a specific video that I had made. When was it? About a month ago. And this is lives. Let's go to videos right here, and we'll be able to see what I'm talking about. So if we just scroll down a little bit, not the 1987 May warning, why this Sunday pump is a trap, is the video that I'm referring to, and it's very important. The internal rot has started, and I done sent on our community post, I done put a visual thing when I had jumped in the 6 to 80 puts and why I was doing it, and then I said a hopium bounce will happen, but then it will fail, so don't chase it. And the timing was slightly off, about a week, 2 weeks off, because I got out of it like a week and a half or a week ago. Last week I think Last week I think I got out of the play though. But so the macro trap is springing. Why hot jobs data, rising yields, and a massive liquidity drain just triggered a market flush. Make sure you like and subscribe, because I'm about to drop something good on you, and I'm gonna tell you what I'm about to do. Like and subscribe, I'll tell you what I'm about to do. I'll tell you in 5 seconds. So I'm going to cut SLB. And you know that's big. So in the 1987 thing, I said that I was going to use SLB as a hedge, but that in 1987, no stocks, no yields, nothing was safe in the market. Nothing at all. Everything got hit. And we seen that, right? We seen that. We got hit hard. So the retail crowd is staring at their screens right now, wondering what just happened, because that was so brutal on Friday. A few days ago, everyone was celebrating new highs financial media was talking about soft landings. Social media traders were loading calls every single day. Every dip was getting brought. Every warning sign was getting ignored. Now the market is rolling over and people are looking for someone to blame. Now, the answer is simple. The market got too far ahead of reality. For months, Wall Street has been pricing in a fantasy scenario where inflation magically disappears. The labor market weakens just enough. So let's talk about why the market got too ahead of reality. So when the labor market weakens just enough, the Federal Reserve cuts rates aggressively and liquidity floods back into the system, right? Last week data completely shattered that narrative. The labor market came in much stronger than expected, right? Everybody's like, damn, the data was cool, it was good. Why are we still dropping? I'm gonna tell you why right now. The economy is not just slowing the way traders hoped. The economy is not just slowing the way traders hope. Yes, I said that. The Federal Reserve suddenly has far less reason to cut rates. This is big right here. It came in way stronger than expected. The second that realization hit the tape, the bond market responded, and the bond market is where the real story begins. See, most retail traders spend all day staring at stocks. Institutional money watches the bond market. Your 10-year, your 2-year, your 30-year, US 10. Let's look at it. So, I'm gonna show y'all the daily. That's a massive run right there on Thursday. When yields started moving higher after the jobs report, the message was clear: higher for longer. That means tighter liquidity. That means pressure on valuations. That means trouble for the most crowded trades in the market. You cannot continue pricing growth stocks at premium multiples while yields keep climbing. Eventually, the math has to stop working. The market has been trying to ignore that reality for months. Now, reality is starting to push back. The entire market has been leaning on a handful of names: AI, semiconductors, mega cap technology. The assumption was simple: as long as the AI story stays alive, stocks keep moving higher. But when major names start reporting results that are merely good instead of perfect, the game changes. And it's crazy, right? Institutions are now paying premium prices for good. They want to pay premium prices for perfection. The moment perfection disappears, money starts rotating out. That is exactly what we are beginning to see. At the same time, the massive amounts of capital are being pulled towards new opportunities, whether it's private markets, venture funding, or AI infrastructure spending, or even a major capital raises. Liquidity is not infinite. Money has to come from somewhere. When institutions need billions of dollars for new allocations, they usually sell what they already own, right? That just makes sense. That creates hidden pressure underneath the surface of the market, and retail traders never see it. It's kind of like a woman when she got a car, saying, "I'm playing under the hood, I'm playing." But the tape sees it, and the terminal sees it. Talk to me. That terminal went crazy, and eventually the price reflects all of this. So this is why the 1987 thesis still matters. A lot of people hear 1987 and immediately think I'm calling for a one-day crash. Wrong, you're wrong. That's not the point. The lesson of 1987 is not the crash itself. The lesson is what happened before the crash: rising yields, liquidity stress, overconfidence, crowded positioning, a market that kept pushing higher while the foundation underneath it was quietly cracking. That is the comparison, not the exact outcome. The setup, the conditions, and the structural similarities. Today we have elevated valuations, rising yield, private credit stress, and geopolitical risk, heavy options positioning. I could just keep going on and on and on. And a market that just continues trying to price perfection. That should get your attention right there. So this is why I'm moving to mostly cash. And I said 750, and I say it could if anything, one of my last videos was like, if it does pass 750, 757, not see 760 or higher. But I said the hopium trap though, that this rally will be a false rally and we will crash down. Now look where we're at. So when the macro backdrop changes, the rules of engagement change, right? This is not about fear, but this is about discipline. When liquidity starts leaving the system, preserving capital becomes more important than chasing the final few dollars of upside. And that's why this sniper risk console is super important. Stop guessing your position size. I built this to ensure that we never blow an account again on a single play. So it has an automatic risk management engine, instant contract calculation, and a black box privacy. Math is hidden, and it's only for $32. So if you're really serious about protecting your account, and if the market got you confused and stuff, you should definitely have a risk console, or you're kind of gambling out there. And it's like being in the ocean with no surface, no land that you can see. So yeah, back to this. So when liquidity starts leaving the system, preserving capital becomes more important than chasing the final few dollars of upside. As snipers, our job is not to predict, our job is to react. If conditions improve, we can always redeploy capital, but we can't. If our contract expires, we can't redeploy that. Money is gone. If conditions deteriorate, cash becomes a position. Right now, I would rather protect capital than fight an institutional liquidity wave. The market may eventually find support and it may eventually stabilize, but until the data changes, the bond market changes, and liquidity conditions improve, I have no interest in arguing with the tape. The terminal does not lie. The bond market fired another warning shot, and now we wait and see whether the rest of the market finally listens. And look at this that we caught on it. Look it. We caught this on Friday. This is the terminal, and it had puts at it was already saying it about like 750, but I forgot the kill. It was like $749 some change. It was the kill shot. It puts was active, and 740 was the trigger, and we dropped way below that. Got a massive move. And then when I dropped it, I put a little description, everything so everyone could know what exactly was going on. We still printed that day, so it was I said the move is a 504 intraday flush. The pivot was $754.56. We gapped under that. And I spoke about a lot of other stuff. So that's why it's important to make sure you could join our lives if you're not in the Discord. Our UAA contracts went crazy, popped off at 102%. Talisha went crazy. She had a massive move in there. She called out SPY at, where was it at? Back in SPY puts, targeting $748. Stop loss at $749. The price was about $748. She posted before that too, so she posted around $750. And yeah, it was a good day, I'll tell you that. My boy jumped in some leaps and added some shares on Netflix. Well, leaps loading, he said. My apologies. He added some shares on Netflix, and yeah, Friday was amazing. So that's why it's important to make sure you hop on these lives, so get you that membership if you're not in the Discord yet. So now, as far as my position goes, I'm unleashing my portfolio. My portfolio that I made was designed for this. I was expecting this to come. I just kept other plays in there. I didn't go fully cash. I kept other plays in there. Once it went past 750, I just stayed light and let SLB do its thing, and it continued to do its thing. We're at like 67% SLB, so let's see how it holds in the first 15 minutes. If I gotta jump out, I'll jump out. So BIZD, I'm keeping. That's my puts I got for December, I believe it is. So this is the leverage trap. It's the Van Eck Business Development Company ETFs. So BDCs are essentially closed-end investment firms that lend capital directly to small and mid-sized businesses. They're highly leveraged, and they act as a direct proxy for the financial health of lower middle market corporations. So when the market is pumping on soft landing hype, BDCs thrive. But under the current macro parameters that I got out, BIZD is walking straight into a structural grind, slow grind down, like that cheese down the grind. They're like, that's what's gonna happen because the hot labor market data forces interest rates to stay elevated. So small businesses that borrow from BDCs are going to see the interest payments skyrocket, right? This massive debt servicing pressure significantly increases default rates among small corporate borrowers. See, I seen this coming for a reason. I've been studying 1987. As an institutional debt simultaneously raised cash from tech earnings and the SpaceX IPO drain, the broader economic contraction will hit smaller debt heavy, and that's why I'm staying in that play. And I entered CLOV Clove on Thursday. That's up 9% and some change, like 9.83%. I'm gonna stay in that. That's gonna hedge for the volatility to the upside. And this is small cap, so only right now the big tech names, those going, we gotta be careful with those. And a lot of things that just happened. AVGO earnings, the SpaceX, people are trying to take their money to get ready for that so they could drop in that. And yeah, we got opportunities coming, but I cut that play, and now I'm gonna stay in that. I got UAA as well. Our UAA popped off, and that's another good play right there for the puts because they one company I don't see doing that good is a company that has a lot of financial issues going on, and their business model is starting to fail, and that's Under Armour right there. And that's going to tell you the consumers too, they're not going to be able to afford that with the interest rates going up and stuff like that. It's about to get even more wicked. And then we got Walsh. He's not coming to save the market immediately. He's not. He already said it himself before he got in. So yeah, we got a crazy week. So we'll pay attention to our bonds. That's our 10-year. We'll pay attention to our 2-year. Sure, you check out that ramsoffthecharts.com too. If you don't know your levels, you'll come over here. Right now we're doing some maintenance right now, so the levels will be fixed by the Ryzen. Doing some maintenance on there, but it's a whole bunch of stuff. You don't know how your support and resistance. You come over here, and this is a chart there that maps out the support and resistance levels. Again, it's going through maintenance right now, but you don't want to just depend on that though. You don't want to depend on indicators. You come to our live on Mondays and Fridays and get in tune with the gang, the whole family. We just learning, we elevating and stuff. So this the 2-year. Look how it's popping off. That's not good. Now let's look at VIX. A relief rally is definitely coming into play. This move. And remember, I said, what was my target? It was around $21 some change, if I'm not mistaken. I said when that spring is released, this is what you get. I said, imagine you having a spring and you just hold it down, push that coil down. The more you hold it down, the more compressed that spring is. Once you let go, it's gonna go. And that's what VIX done. SPY was super nasty. Oh, let me show you SLB's chart. Look at this on a weekly. This is not just people like, oh, let me get out. This is distribution. Look at that. That's a headshot right there. Right. See, that's institutional taking their money out. They're getting ready for the IPO and protecting their bag from a lot of other things because we could have a huge drop. So right now, we lose about 730 some change. I forgot what exactly it was. I had posted it. 730. We lose 730. 710 is the target. We lose 710. And I got 697 and then 690 and then 680 or some change. Let's see. Pull up the spot chart. 720, 697 is there. Yeah, 697 is looking like a good spot. 697, 678. That was a nasty drop. So I'm not chancing it with this market. QQQ really got smoked about 5%. That was really nasty. That wasn't just, we're just taking a little bit of money. No, we're taking all of our money and we're rotating out of everything, and there's nothing to rotate in. So just be calm. And what we're going to do is stay on our cash. I'm going to keep my positions how they are. I got a lot of puts. I got everything I need for what's about to happen. I've been prepared. We don't react, because when we react, we got to just think in a moment. But if we are prepared already when it happens, I'll be like, all right, I gotta do this now. I think as much because I was already waiting for this to happen. It's just a matter of just being patient. So now we're gonna day trade and take advantage of this negative gamma environment that we're in. And that, negative gamma environment, what does that do? The range widens by a lot, so we can take advantage of what's going on. If you don't know, that's why you need to purchase that $13.99 membership and get that handbook or the book that we did, because it explained what negative gamma environments does. We're looking at Bitcoin. We're getting a relief rally on Bitcoin. I'm expecting that to fail, but we got some room up. Let's see where we could go on Bitcoin. Pull up the daily. We could come back up to 70,000, 6,800 to be exact on Bitcoin, to 70,000, and then reject lower, or we could just reject that 66K. So let's see what Bitcoin does. Bitcoin is not done dropping, I promise you that. We got Meta over here. Check out our Mag 7s. Bomba Glob. That engulfed this whole range right here. April to April 30th. Oh my God. Look at this. This too. Oh my God. Sheesh. April 8th. Wow. Smoked. Yeah, I already told you I don't touch Meta. I see 530 coming, and if it continues to go down, I got 537. But I honestly see it. There's a good chance it could come down to $483. And then I even mentioned, let me pull up the exact level, $345 is not out of the question here. Yes, I said that, $345. Now let's look at Tesla. Tesla, Tesla could be coming to $374. Watch for a bounce there at that 370 area. It's possible, but it looks like it's coming down here though. Looks like it's coming to get this liquidity at this 340 area. So let's see what Tesla do. I'm not interested in the upside. So everything that I tell you right now, not interested in telling you the upside, because you could trade off a bounce, but it's risky and it's not worth it. For Google, rejection around this 377 level could take it to 335. I like $305 as well on Google. So let's see, because Google, we're gonna watch that $335 level on Google. And Amazon, we gotta make sure we check our oil. Ooh, Amazon, $234. Amazon taking a nosebleed. It just dumped. It jumped straight face first. Yeah, 227. All right, so Amazon, $234. Then Meta. Let's check Nvidia. I got, remember, $198. We're right there. We're at $205 right now. Not far at all. I could see Nvidia coming to $165 if it loses $198. No, after $198, sorry, then I got $189. It lose that $189, I got $165 on Nvidia. Let's see how it does. Potential bounce at 193. And then what other ones am I missing here? Microsoft. Let's see how you looking. How you looking, Microsoft? That sucks. It was starting to go up too on Thursday. Smoked 411. That's not where we going down. We're going lower than that. That bounce is going to fail. It's going to get a bounce at 411. It's going to fail eventually. And then it's going to come down to $385. And I could see, oh man, on Microsoft, I could see 330 and even 285 is not out of the question. Oh man, so 1, 2, 3, 4, 5, 6. Who am I missing? Microsoft, Nvidia, Amazon, Google, Tesla, Meta, Apple. Can't forget about you. You've been holding. Let's check how you did. Ooh, yeah, this thing about to get nasty. I said $304 was the target, $305 was the target on Apple in my last video. I see Apple, if it loses $297, it's coming down to $286. And if it loses that $286, then we will be watching for $275 on Apple. Now let's see what oil is doing. So this is WTI, and it looks like a bull flag possibly on the monthly. This is the daily. Nice base right here holding. It didn't get smoked on Friday. Yes it did. My apologies. It's getting a relief bounce and it's testing the 20-day, but honestly, it's sideways, so I can't even call it right now. It's consolidating, and I don't want to be in the way of none of this at all. Oil, it's not telling me much. It's inside the range. Don't want to touch that. I want to stay away from that. SLB, we out of there. Thank you for paying us. We ate good. Brent's the same thing. We ate good. Almost $300 in profit on that thing, and still have more than 200 days, but we're going to cut that thing. And yeah, not a fan of oil right now. So just watch your yields and stuff as well. So make sure you join our live tomorrow, because I have an even bigger announcement than the membership. We have something special for you guys tomorrow. So make sure you join. And yeah, you're gonna love it. With that though, I leave everybody off with the highest human act that we can achieve is to inspire. And would you rather be at war with yourself and at peace with the Discord? But would you rather be at war with yourself? Discord gets it. Would you rather be, I'm abnormal. Would you rather be at war with the world and at peace with yourself, or would you rather be at peace with yourself and at war with the world? And I leave you off with we should just serve each other, make the energy as positive and as high, the frequency as high as it could be, and love life. Life is so beautiful. Just smile. Even if you don't feel happy in that moment, just keep telling yourself you are happy and replace negative thoughts with positive thoughts. Keep your faith, and I promise everything will fall into alignment. Because you are a God, not a big God, but a small God. So you have the ability to create anything you want and to control anything you want. But if you're using it in a good way, not against the truthful way, because the truth is light and lies is dark. So I leave everybody off of the words of peace be upon you. In Arabic, we say assalamu alaikum. Peace to the gods, peace to the goddesses, peace, love, light, and healing upon everyone. Stay focused.
Sniper discipline, never looking back. Snipers HQ, stay focused.